I know you don't like the idea of trying to time the market. I'm not going to ask you to do that. And I'm not going to ask you to say that, hey, this tech rally is over. But you do see what you describe as the possibility of some downside volatility this summer. Why?
Absolutely. So looking at the tech rally we've seen year to date, pretty impressive. You don't get these types of rallies very often. Question is, what's next? Could we see this rally continue, or are we at a bump in the road here, or could be at a sort of a precipice with some downside? Sort of putting all these pieces together, we do see a bit of volatility coming up. We do look at market sentiment, sort of investor behavior. The VIX, or the fear index, is really plummeting. To us, that is a concern about investors getting complacent, so that we do have some worries there. A couple other pieces of the puzzle here. So look, tech stocks, again, had a great rally. They're just way more expensive now. We started the year at 20 times earnings. Now it's 30 times earnings. That's a tough hill to climb. And I think if you really want to see some more excitement out of these names, you may need another theme. Is it another AI, maybe a twist on AI? Or perhaps finally our earnings are going to come through for some of these companies and really drive another leg of growth. So some questions there, but I think in general, I would expect more volatility as opposed to less as we start to get through the summer.
Mike Santoli, thoughts, reactions?
Yeah, I mean, we certainly had a lot of the factors aligned coming into this week for at least a breather in the leaders of this market, which has been the NASDAQ 100. A short-term trader sentiment gauge was at 93% bullish for the NASDAQ 100 entering the year. It just doesn't get much higher than that. I think the question is exactly what the choreography of such a pullback is going to look like. And today is probably the ideal orderly example of how things could play out. The NASDAQ 100 down 1%, the broader market flat, everything outside of tech is net positive. JP Morgan tickling a new 52-week high, that stock. So I do think there's a way for it to kind of release some of the pressure. Yes, we've rebuilt the valuations a fair bit. If I look at the NASDAQ 100 forward price earnings ratio, it peaked around 30 back in late 2021. It's back up to something like 27. So, you know, maybe you have an optimistic call on how earnings forecasts will go, but that's still looking like it's pretty rich, although I don't think this longer-term trend, which has just reasserted itself to the positive side, it's too early to say that it's ending.
And so, Mike Bailey, is your call for people to move to the sidelines? Is fixed income more appealing? Small caps? Where do you think there's better opportunity?
So stay diversified. I think in general, if you've picked NVIDIA at the beginning of the year and you've had a great run, make sure you've still got a diversified portfolio. If that stock is a big chunk of your holdings, you want to be careful with that. Is NVIDIA going to keep ripping the rest of the year? Probably not at the same pace. To really just stay involved. I think the comment at the top was correct. We do want to be fully invested. We prefer to avoid market timing, but just make sure you need to rebalance and see what else is out there. There's some great names in tech. Tech earnings are growing. You can look at 2Q earnings estimates. A lot of the big tech companies, you're seeing some significant growth faster than the market. So I think you want to participate there, but just make sure you've got some other stuff in staples, healthcare, in case we hit a recession, so you've got some offsets to the big tech growth.